Hey there, welcome to ShareTreck. This is our Q2 2022 earnings preview series. And many of our genomic companies are starting to report their Q2 2022 earnings. I've already done estimate for a few companies, which is in our homepage on YouTube. You can check that out. And today I'm going to talk to you about BlueBird Bio. So let's get started. Well, let's get started with our earnings review for BlueBird. Those of you who are regular to the channel know that I cover BlueBird Bio in our daily technical analysis in the morning show as well as in the end of day live stream, which happens at around 3:30 every day. And I've also bought out Q1 earnings expectations video on BlueBird. However, our channel has been growing and there are many new subscribers. So a brief background of BlueBird is in order. BlueBird develops gene therapies that have the potential to treat rare hereditary diseases like beta thalassemia and CALD, which is cerebral adrenonucleodystrophy. And on June 10, the company reported that FDA's non-binding advisory committee had weighed in unanimously and positively on not just one, but two of its pending regulatory submissions. The submissions pertain to its Beticel and Elicel therapies. Beticel is intended to treat beta thalassemia, and Elicel is intended to treat CALD in adolescents. BlueBird also had a bit of a setback last year. That is, it was split into two, forming 270 Bio to take over its work in oncology. A major setback for BlueBird was also the decision to pull off Zynteglo from the market in Europe over pricing disputes. Since then, it seems the company has not recovered. And Zynteglo was an approved gene therapy in Europe. The pricing being high, it was found very difficult to make it economically viable. And at the end of it, the company just pulled it back. The company has at present a very short cash runway amounting to around $312 million. This is expected to last into early next year with appropriate cost controls. So in my estimation for earnings, I have kept all of these things in mind. We saw a significant dip in R&D expenses in Q1 2022. So that was the first sign that the management was attempting to extend the cash runway by curtailing expenses. But we should remember there are 5 candidates in advanced level of clinical trials with FDA for this company. And cost cutting can only go to a certain extent. So right now, I think we should see BlueBird evaluating funding options and further equity dilution. However, an approval of Beticel or Elicel could change the situation. The potential of equity dilution may be weighing on the share price, I think, because the company has got too less of cash in its balance sheet. And therefore, as they say, vultures might be circling. However, BlueBird could also be a target of takeover or collaboration on their monetizable asset. We will find out soon what it is going to be. It should also be noted that in the recent past, the company was heavily shorted and many short sellers lost their money when the advisory committee published a positive verdict. And at that point of time, there was a lot of short squeeze going on and the share price of the company spurted a lot. So I think at this point of time also, there could be some shorting at works for people trying to make money, assuming that this company is not going to be able to get FDA approval, and that it will soon have to sell off its asset, and therefore the share price will go down. So that could be one of the thinking which could underpin the recent weakness that we have seen in the share price. Now to some positive news. The advisory committee hurdle has been cleared for Beticel, but the binding committee will have to meet and take a decision on unlocking the fortunes of BlueBird, both with respect to Beticel as well as Elicel. I don't think that meeting has happened yet, and expect it to be held very soon, because the deadline for a decision is 18th of August for Beticel and September 16 for Elicel, according to the best of the information that I have. And 18th of August is fast approaching, so we should potentially hear something very soon. Another piece of good news is that earlier this month, Institute of Clinical and Economic Review, which goes by the acronym ICER, reviewed Beticel. The ICER calculates that traditional cost effectiveness modeling finds that the new treatment meets commonly accepted value thresholds at a cumulative price of $2.1 million per patient, with an 80% payback option for patients who do not achieve and maintain transfusion independence over a 5-year period. And after reviewing the cost model, all 12 panelists of one of ICR's 3 independent evidence appraisal committees found that available evidence is adequate to demonstrate a net health benefit when Beticel is compared to standard clinical management that is available at this point of time. The ICR panel voted by 9 votes to 3 for the finding that Beticel represents a high long-term value for money. According to BlueBird Bio, Beticel's US price is to be based on its clinical value to patients only, rather than its ability to offset costs of current therapy if approved. The progress made by Editas with Edit 301 is potentially creating an overhang on BlueBird for sure. However, we should remember that Beticel was approved in Europe as Zynteglo, but was pulled out of the market as price was considered too expensive. So with that background in mind, the ICR vote of confidence is very significant, and also the new pricing approach articulated by the company is conducive to successful monetization in my personal opinion. With that said, let us turn to my spreadsheet to evaluate the potential EPS and revenue estimates for Q2 2022 for BlueBird Bio. So let's go to my spreadsheet now. Let us start off with the assumptions I have. So this is my spreadsheet for revenue estimate for BlueBird, and I have made a few assumptions which I'm going to walk through right now before we go into the table for profit and loss. First of all, I've reduced revenue as I can't see any revenue source. And if you notice, in the last quarter of 2022, the first quarter of 2022, we had a very low revenue compared to everything in the past. So I have just halved it just to be on the safer side, a conservative approach. I've also reduced cost of revenue, assuming that the management works to curtail costs and therefore would be very selective about pursuing revenue opportunities which are slightly less expensive than they were before. And that's the reason why I have brought it down there. And this leads me to an operating income, or actually in this case, operating loss of $98 million for the quarter Q2 2022. I've also considered that inflation will be factored into all the costs. I've reduced the operating expenses due to cash runway concerns, and also the 30% layoff that was announced earlier. So if I take the effect of all those things and apply inflation to it, then I have come up with a number of 95 million out there, and that's the number that gives me an EPS of 1.31 negative for each dollar. That's a loss of around 1.31 per share, with a basic average share count of 74.6 million, where I have increased the basic average shares by around the same amount as I saw the increment between Q4 2021 and Q1 2022. So that's the most conservative approach I could take towards that, and that gives me negative EPS of 1.31. And also I arrive at EBITDA of 98 million loss. So that's the overall analysis I have out here. Now I would like to test this with some other analysts which are on the street who have come out with their revenue estimates as well as their EPS. The numbers I have put here are to the best of my conviction, and I think that this year is going to be this quarter is going to be difficult for the company. And if the expense cutting that I am seeing here has not been met, well, there's a good possibility of that happening, because we should remember this company has got 5 candidates of their pipeline in FDA approval cycle, and especially with Beticel and Elysel, if there is anything required by the FDA, I think the company would not hesitate to spend in order to make those data and information available and perform those activities. So that thing could probably go wrong, and maybe we end up spending more on the operating expense than I have anticipated out here. So that's a possibility that we have to keep in mind. So these are all my personal opinion. So you can do your own research and compare it with this just as a roadmap and see where you arrive at. Now let's go and have a look at a few of the places where we will find these estimates and see what they say. So first, let me start off with NASDAQ. So in NASDAQ, if you look at Q2 2022, they have a revenue estimate for 1.31 negative. And that exactly matches with what we have. But let's go and look at Yahoo. Yahoo has got 11 analysts who have analyzed this company and come up with earnings estimate. And according to them, the average estimate is minus 1.24 and the low estimate is minus 1.41 and the high estimate is minus 0.93. So we are coming somewhere between the average and low estimate out here. And when it comes to revenue, they are having an estimate of 680K. So we have taken a much higher revenue out here. We took 900K as the revenue. And since I didn't have any basis, it was an arbitrary number based on what was done in the previous quarter. So that's how I arrived at that number. So here also we are still within the sanity check levels. And if I look at tip ranks is saying that, let us look at what they say. August 3, 2022, minus 1.26 is the consensus EPS forecast at tip ranks. So we have come slightly worse than this at minus 1.31. That is negative 5 cents more than this. And finally, let us look at what we have at Zacks, which we saw before. That was minus 1.31. So that's what we have overall. And now let us go and have a quick look at BlueBird before I just wind down the session. And if you look at the BlueBird chart, you would see that we had a bit of a raise out here where the share prices went up and now off late started coming down. That is because of earnings jitters, because earnings are going to be released on 4th of August. And the estimate out here in TradingView platform is minus 1.26 with a revenue estimate of 706. So as you can see, revenue estimate is wildly fluctuating depending on where you look at. So everybody has their own assumptions and they have come up with those numbers. That definitely has an impact on the EPS. So the variables that we are playing around here with is the cost, operations cost, is the revenue, and also it is the number of authorized shares that are in circulation. So all those things have a bearing on the EPS. So I think I'm satisfied with my analysis out here based on whatever information I had. I would like you guys to share your opinions in the comments below and let me know what you think. Because this is more or less like a flying blind because these companies do not give us much information. And since they are pre-revenue companies, it's very difficult to take the past as a guidance for the future. If the company had, say, multiple revenue streams like 4 or 5 drugs which are selling, we can always estimate from the past sales what could be the sale for the current quarter. But that thing is not available here. So again, it's going to be a bit of a tentative estimate. But take it with a pinch of salt. The idea is that as the more and more we start doing earnings estimate for these companies, we get that much more familiar with those companies. And because we are doing daily updates and end of day live streams where we look at the share price movement, we become much more familiar with these companies. And that's the reason why we do these exercises. And there are other people who have done the same exercise and put out the numbers there. If we just consume those numbers, we will not get the depth of understanding of the company that we would get if we did our own analysis. So I'd encourage each one of you to just take a spreadsheet and start doing an analysis and come up with a number and see whether it seems plausible. Check it with the other estimates that are around and see how it works, just like I have done here. And that way you would increase your knowledge of what's happening with a given company. You'll be intimately aware of their cost patterns and profit patterns. And that will in turn help you become a better investor. So with that said, I would like to bring this video to an end. If you like this video, please press a like out there. And I will also let you know that there's going to be more companies for whom I'm going to come up with earnings estimate. And I'm also coming out with a company profile of genomics sequencing companies. I've already published one that was Oxford Nanopore. And with regard to Q2 earnings estimate, we already done PACB and we have done Intelia. So I would request you check those videos and also subscribe here so that you can get to see all this. And don't forget to press the notification button, because if you do that, you'll get to see them immediately as soon as I publish it, and you can then choose to schedule when you want to watch them. With that said, I would like to say bye to you. I hope you enjoyed this video. Bye for now.